Hello, and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, October 25th, 2024, rounding out the end of the month here. Here's what we got on deck. We're going to jump right into things today. Not a tremendously busy week. It felt a little slow out there, but there were some things to pay attention to. I think front and center now is yields. We talked about this the last couple of weeks about how they were rising at a pretty good clip, but maybe didn't put as much emphasis as we should have on the risk to everything else that was going well in this market. And I think the 10-year Treasury yield now up at 4.25 going into the weekend. I mean, it was just trading at 3.7, 3.75. So I think the speed at which yields are recalibrating right now. Of course, on one hand, it's good because it symbolizes that there's some growth coming, that the market's perhaps sniffing out more growth in the economy. But when interest rates increase at this such a rapid repricing of a pace that they have, that's where things get a little bit concerning. So we're going to circle back to that in this video. How about that Tesla trade setup, though? That was one of the key highlights from last week's video. And of course, we had now seeing the move, that vol expansion that we were looking for. We're going to talk about that trade. McDonald's making news this week. We're going to look at that chart as well with the Ecoli breakout there hitting the stock. Semiconductor showing some signs of cracks. I want to circle that a little bit. Right now, things are tame, but I want to just give some thoughts there. And I think the most important, we're going to look at all the Mag 7 stocks in this video because all of I think all the heavyweights now are reporting next week. So we're going to get into that in this video. Let's get into it here. We've got our charts open. Warden TC2000. This is the charting platform we're using. It's a platform we support here at the Trade Risk. If you're looking for a new charting platform for the new year, well, check it out. We got a referral link in the description of this video. We'll save you some money on a new subscription, and we have lots of downloads. We have lots of tutorials, guides. You can work with me, build some things that are custom for this platform. There's lots of flexibility, especially for the shorter term traders looking for stock scans, indicators, all kinds of good stuff like that. So check those links out in the description of this video, and we're going to jump right into the data here. If you follow my mouse right hand column, you can see 1 week return pretty much negative across the board. Nasdaq 100 managed to eke out some slightly positive gains, and that Russell 2000, it's a shame because I've been looking for this trade to start to kick into gear here, and it was down the hardest this week, down 3%. Take a look at volatility as well here across the board. You can see everything was up basically a point or two. We're getting closer to the elections now. We've got a big earnings week ahead of us, and we've got a little bit of some sell-off here, some selling pressure in the Dow, in the S&P 500. So we can see that vol was up across the board. Now, if we take a look at sectors here, it doesn't really get any prettier here. You can see pretty much everything was negative. Consumer discretionary was positive. Thank you, Tesla, for that. Everything else was in the red. Technology was the best performing. Again, probably thank you, Tesla, on some of the help there. Materials, healthcare, industrials down pretty hard, 4 to 3% there on that group. Now, if we take a look at our sector trends, we are going to notice that things are starting to break a little bit here. So if we looked at, the last handful of weeks, we saw breadth was improving, breadth was strong. There was sector participation, but that is starting to break a little bit here. We've got a lot more yellow dots. We're looking at our custom smart trend filter, an indicator that's available for TC2000 in TradingView. Take a look at materials, take a look at staples here, take a look at healthcare, take a look at biotech. There are things now starting to shift back down as there's some selling pressure and some retracements coming across the market. So that is something to be aware of. And if we go even a little bit further here and we take a look at market breadth underneath the hood, take a look at the last handful of days here, almost all this week, frankly, you could see that the number of stocks hitting 52-week highs really started to dry up, and the number of stocks at 52-week lows really hasn't upticked. So that's good. We haven't seen a big, increase there yet, but we are noticing at least that ratio sort of flatten out a little bit. So this is time now to keep, these things on our mind. This is a little bit of changing of the guard underneath the hood here. Of course, again, election jitters starting to really creep in here, just sub 2 weeks away, and a big earnings week. So things could change pretty quickly here, but you've got just some yellow warning signs when we look at some of these factors. Now, if we take a look, a quick pit stop first at Investors Business Daily. So shout out to IBD, they're a sponsor of the show. I'm not sure if I updated this on the latest IBD 50 list, but you could do that yourself. If you join with that link in the description of this video, you can support us, support the show, get yourself access to their IBD 50 list, and curate this yourself every single week of top performing leading growth stocks. Now, let's move on to our macro slide here. And again, this is illustrating what has really sort of taken place here. On the bottom right is the 10-year treasury yield. And this is basically as vertical as you're going to find. If you look at a rolling return basis, or you look at just how fast in the magnitude of this move, it is sharp in a very short amount of time. And so you can see now, this isn't an innocent, kind of bounce rally here. This is potentially a bigger counter trend or trend change move that is occurring here in the 10-year treasury yield. So we've got our little kind of higher low that just got printed here. This is, again, another custom indicator of ours. And you can see that we are still off to the races. Now, again, we are extended here in the short term. So if you're looking at IEF bond proxies, yes, maybe you can find some mean reversion trades now at this point, but still this is something that is potentially concerning here on a bigger basis. We're going to want to continue to keep our eye on this. Stocks have been mostly shrugging it off until, I guess, this week, where now we're starting to, see a little bit of reckoning here. But markets have done equity markets have done a really, really resilient job here at kind of shrugging this off, but we shall see if that can continue. And the top slide here is the dollar, and you can see the dollar equally here just going vertical to the upside. Now, in terms of commodity land, we did see crude oil get a little bit of a bounce back here, so it's back in a strong performance for the past month. Gold continues to work in this environment. Silver kind of, pumped the brakes a little bit. Copper, Bitcoin also down this week. So let's get into the charts here. Kick it off here with the S&P 500. This is the weekly time frame, and we finally have that weekly pullback, that weekly down week, right? We finally got a little bit of selling here. We're finally off of the highs. Now, nothing too extreme yet. We were down just shy of 1%. If we take a look at the daily chart, though, so we charted this last time. We talked about this area right in here, and it did manage to hold it, 5,800. This was the approximate low from last Tuesday, if you recall, when we had that kind of turbulent session that had no follow through. We ultimately held this line. We did undercut it on Wednesday, where we had another kind of tough, sell session here on Wednesday of this week. And then we kind of clawed back Thursday with an inside session. Friday, during the session, morning time on Friday, market was looking good. It was trying to probe higher. It was trying to push higher. Take a look at this tail here, S&P getting close up to those highs. And then we saw basically a reversal and a close towards the session lows here, setting up what could be a little bit of a bear flag here in the S&P 500 heading into a very important earnings week. So S&P 500 now is really kind of sitting sideways here with a slightly bearish kind of look in the very short term. I think broader, zooming out a little bit more, I think we're still want to pay very close attention to this area right in here, sub 5,700. That's the approximate highs from July. That's where the market broke out from. That, I think, from an intermediate term basis, longer term kind of swing traders, position traders, is a good risk management spot in the sand to, sort of dictate exposure. So if we're still above 5680 or so, then, you've got some things to trade against, and maybe some hope there that momentum can stay alive. The Nasdaq 100, though, was surprising. It did outperform on a relative basis this week. It was up 0.17%, and it needed it, because if it didn't, and it acted like it had been, and it started to really roll over here and show some weakness, I think this would have been a lot more difficult for this week's trading. Of course, I think the market is just kind of locked sideways here now for earnings to come out next week. So just like we highlighted Tesla last week, I think the QQQ is going to be ready to move here. And we have all the heavyweights reporting next week, and we have a nice tight sideways range once again. So I think this is a big week for Qs. If the election wasn't right, after in another week or so, I mean, I'd say this is the big kind of Super Bowl week here to set up the end of the year sort of direction. But we have kind of this double header here where earnings are out next week, and then the very following week we're going to have the election results. So that will be kind of a double whammy here. But I think the Qs are compressed. They're sideways. They're not giving up much. And I think they are a little vulnerable here. I think if we get some weakness out of these big tech companies, I don't know that we will. It's going to be on the guidance and the, reading in between the lines here on how good is good. Can the growth continue? But if we see any type of slips here, this looks a little bit, kind of precarious here at how it's been slower and underperforming on a relative basis. So I have a little bit of a glass half empty outlook here for Qs, while, full disclosure, having a position in the Qs. I still have, from our Galahad trend following system, a position here in the Qs. It's a longer term trend following system. So the, the potential concern here in the short term has not showed up enough to give us a sell signal, right? That's the difference between maybe a discretionary trader who's trying to forecast a little bit and preempt moves versus someone who's following trading systems, trend following at that, and, really just waiting for the move to develop a little bit more. So we shall see how this plays out, but some warning signs here this week. Russell 2000, a little bit of a heartbreak this week because we did push off of, or I guess pull off of these highs here. So last week we were pretty much nestled right up at the cycle highs here, and then we gave it up this week. We kind of retraced back into this old range. So for Russell 2000, I no longer have that position anymore. I established the position over here. I did sell some towards the highs, and then I don't remember where I kind of sold the rest this week, but I no longer have that Russell 2000 exposure. Our Merlin trading system has a lot of this exposure, has a lot of these kind of smaller, medium cap companies in different sectors outside of just mega cap tech. So I still have a lot of exposure to this factor, let's call it, but no longer have a direct IWM position. I don't think it's out. I don't think it's over. I don't think this trade is done. I just think it might need some more time. I think getting back over 225 now is just going to be another pretty clear level in, line in the sand here is approximately the July highs, or approximately the highs from just 2 weeks ago. And the Russell 2000 can start to move pretty quick in a very short amount of time. So I wouldn't call it out. I think if we started breaking below 210, then we have bigger concerns. We're not there yet. And I don't necessarily see that yet, but again, we'll take it 1 week at a time. So that is the Russell 2000, the major markets. Let's take a very quick look at oil real quick, because that had a pretty good move this week. It was up 4%, still pretty sideways here. Even though a 4% move is a big week, it was down almost 8% last week. So this week just really is setting up an inside week for oil. Not too much to say about it. Gold continues to work here at highs, extended, but at highs. Silver, again, looks good, pulled back a little bit. Very heavy volume coming in to silver today, this week. So something to note. But, the trend generally here still looks pretty good. Now let's take a look at a couple of individual stocks. We'll start with Tesla. So if you recall, this was the trade that we talked about last week. We talked about this vol compression, the sideways trading, the fact that there was a big gap here. And we said there would very likely be an island gap here, one way or the other. Unfortunately, my crystal ball is not working. It's in the shop right now. I cannot predict direction, but I certainly can take a look here at intuitive vol compression and kind of understand that, a trending move is likely to ensue. We had earnings as the catalyst, and that's about as beautiful, picture perfect of a vol expansion and trending move as one could picture. Take a look at the big volume coming in here. If we look at a weekly chart now of Tesla, suddenly doesn't look look too bad. If we start, really taking out and finding follow through over 275, let's call it, then, you could really get a more meaningful, longer term, bigger move out of Tesla. The stock has gone nowhere for 4 years. So it has certainly put its time in digesting the 2020, 2021 run up. And this is going to be a bigger story that would play out into next year. So in the short term, I wouldn't be surprised to see it kind of stall out and find some selling pressure in the low 270s. Longer term, let's see if it can hold this gap and then eventually make a breakout. So good. Congrats to anyone that took that trade. That was a nice move there in Tesla. I am certainly interested in it. McDonald's was another one from our this week's stories. This was with the Ecoli breakout here, and you can see on the weekly time frame, that's a pretty ugly bar here. Take a look at the volume coming in. It's pretty much the heaviest that we've seen. This is dollar volume, pretty much the heaviest week of McDonald's that we've ever seen, going back to 96 I got on this chart here. So this was certainly a loud week in terms of what the market was doing here relative to order flow. If we go down to the daily chart here, you can see we've got this big open gap now. And based on Friday's close, this could look, like it's going to make a second leg lower here. So if this open gap remains and buyers can't get us back over 300, then it certainly seems like McDonald's wants to continue to probe lower, maybe come down into the 280s or so next week or the next month. It depends, of course, how this whole, health crisis gets followed up, right, and mitigated. So we'll have to keep an eye on that, but McDonald's certainly losing some steam and some momentum. Weekly chart, longer term, it's still up and sideways and doing its thing, but it's generally not the most exciting spot for traders to be fishing in. So that's McDonald's. I wanted to do a quick look here at semiconductors. I think semis look very potentially vulnerable here. This is almost a more extreme example of the Qs, right? The same thing we talked about the Qs here, is it kind of spent a lot of energy to get back up towards these highs. And then if it rolls over from these highs, it's just, it's in kind of a bad, messy spot. I think semis is almost even worse. So semis have not even gotten back to their July highs. We didn't fill this gap here from the 17th. And this looks pretty sloppy. This doesn't look great to me. So hasn't triggered. There's no momentum to the downside yet, but I would just, I would keep an eye out here for what this, for how this plays itself out. I think if it starts losing 245 or so on SMH, then that looks like it's going to roll. NVIDIA, I think, is also at a very interesting spot, right? So, maybe lots of folks celebrating the fact that we're making all-time highs again, but I would just point out that if we lose with some authority this 140 area, effectively creating a double top here, that would be, again, concerning, and that would put a lot of pressure on the SMH. So not saying that's going to happen. Again, we don't make predictions. We're just staying open-minded to the price action that the market is giving us. So I don't know if those short trades are going to play themselves out. I don't have any short exposure on either of those trades. I would consider it, but it's just something that is on my radar. So that is it for semis and NVIDIA. Let's finish off with the Mag 7 real quick, and we'll be off with our weekend. So most of these are reporting next week. So let's just take it one at a time here. Let's look at Apple up here in the top right first, and you can see Apple daily chart really hasn't done a whole lot. Again, the market, I think, with a lot of these Mag 7 stocks, they sort of feel like they spent a lot of energy and time to get back up to these July highs, and I do worry that these end up breaking to the downside. Again, don't have that trade on. It could easily accelerate up, but I think you have some signs of concern here. Microsoft, again, there's just not a whole lot to say about it. I mean, it's just sideways. It hasn't It hasn't done anything. I don't know what this is. There's nothing really tradable here to me. I mean, you can go after the smaller swings, but it's just moving sideways. So I don't know. I don't have anything exciting there. Nvidia, we already talked about. I mean, Google's probably the most actionable. Honestly, it lagged for a lot of this, and it looks a little bit different. It's probably my favorite out of all of these. I do have a position in, I believe I still have a position in Google. Pretty sure I do. Still have a position here in Google. This consolidation here, it's been taking its time. It's got some gaps that it never filled, but this, certainly is ripe for some vol expansion here as well. We'll see how that one plays out. Amazon is very similar to like a Microsoft down here. I just don't have any good read or clear signal on that. I think Meta actually is probably the best looking of. I take Google back. Meta is probably still the best looking here. The Mag 7. This has been really behind Nvidia, the best performing. It's, kind of bull flagging here, consolidating, breaking out under highs. I mean, that looks pretty good. Tesla, we already talked about. So it'll be an interesting week. I think Meta, Google, probably my favorites. Everything else is kind of a pass. I think Nvidia is potentially concerning. I think semiconductors are potentially concerning. And that's what I got. So hopefully this was helpful. Hopefully you had a good week trading out there. We're quickly coming to the end of the year, but we still got plenty of trading left. We got some big events coming up. So make sure that you are tuned in for those future episodes. We'll see you back here next Friday. Don't forget, we got links in the description of this video, our trading systems, our TC2000 downloads, our sponsor IBD. There's lots of stuff in there. So spend some time this weekend checking out those links and hope you have a good weekend. We'll see you back here in a future episode. Take care.